Evet, tekrar hoş geldiniz. Welcome back from Coffee Break, distinguished guests. Let us move ahead with the next panel in the line, looking into the leading role of banks in digital innovation. We have a distinguished panel, and I would like to invite our panelists for this panel. Cahit Erdoğan from Yapı Kredi, Sinan Erdem Özer from Odea Bank, Tolga Ulutaş from Definex are discussing. Artunç Kocabalkan from Black Swan Finance is moderating the panel. Please join me welcoming our moderator and the panelists. Hoş geldiniz efendim. Merhabalar.
Merhabalar.
Hoş geldiniz. The panel will be conducted in Turkish. Please note of a concurrent country presentation on Lithuania starting in a minute, in Kakun as well. Lütfen buyurunuz.
Efendim herkese merhaba, hoş geldiniz.
Hello, everyone. Welcome. Following Emre Hoca, Professor Emre, it would be quite a difficult job for us to fill the room in this panel discussion, but I'm glad to see that there are people that follow us too. So welcome, everyone, and without further ado, let's jump right in. So are banks really the driving force or lagging behind in the fintech environment? So we're not lagging behind, right? Maybe there's that kind of vibe surrounding it, because we're not supposed to say we're lagging behind. Well, we're going to talk about data. That's not something that we're used to in Turkey. Black Swan. Let me talk about why we call it Black Swan. Because when we think of Fintech as a concept in Forex and in crypto, the regulators really crack down on you, and they want to leave you immobile. So, are you the driving force or not? And then let's see if we're going to maybe have a black swan risk ahead of us. So, just like you said, around the globe, it's almost like a massive divide. Banks on one side and creative fintech companies on the other. But in Turkey's specific context, I think it's a different picture. Because globally speaking, banking industry in Turkey is already very creative and pioneering, not maybe in every area, but in many areas. And we also see this in the figures that we have. For example, just a few days ago, Startup Watch report came out. So we have about 700 fintech companies that are monitored. About 40% of them are payment companies, payment systems companies. And what does that mean? So we have payment systems. For various reasons, Turkey has really transformed businesses. That's why it's been a very global scale leading the way. So both digital payment systems and credit cards. So we are among the pioneers as a country. And what has nurtured all these years, nurtured this industry all these years? Banks. Banks have invested largely in technology, paving the way for this growth, both in terms of how they contribute and the other services. And we also have an ecosystem that really supports the way. So 40% of 700 fintech companies are payment systems companies, and these are all really interrelated and they nurture each other. I don't think that we can say, oh, one is driving and the other is following when we think of the various players in this industry, because obviously we have regulatory reasons and historic reasons for why we are where we are, because in the past we had highly inflationary environment. Payment systems were in a different mode, but at the same time, banks and other institutions are not lagging behind or at the forefront. I believe that compared to many examples in other parts of Europe in the recent years, in about a decade and 15 years, we have seen dramatic changes that are emerging in this environment. And the fintech ecosystem has these players that really nurture the growth that we're talking about today. I believe that they're all major players in Turkey specifically. At CNBC, I did a program with Endeavor on entrepreneurship, and Akbank was one of the first banks that gave out money for entrepreneurs. And that was an Obama summit in, I think, 2012. There were Airties and Positron, and then Yemek Sepeti Nevzat. Because he's from Trabzon, we're not on speaking terms. Joking, obviously. So we're talking about companies that have a fast development growth, and already I've talked about 3 of them. They were supported by banks. I'll just put a twist on the question. So, are we on the side, ahead, or behind? Do you have Bitcoin? Then you must have something else. Because if you say the next 2 things, we'll find our way. Anyone who's not traded Bitcoin, those who have not done so, after this panel discussion, should be encouraged to trade Bitcoin. Because obviously Bitcoin is part of the fintech environment. I'll share with you an anecdote. Jahit is my former boss. We were talking, and in 2017, you don't have a tie on, and you're sitting next to your boss. I guess maybe he adapted quite fast. In 2017, Jahit entered this business, and he wanted to do mining as well. And I was complaining about that because I said to him, why didn't you advise me financially at the time? Well, maybe I have not really been too late. There might be opportunities for that. Jahit really summed it up very well, because finance really has a special position in Turkey. Some activities are run very fast, and banks are really leading the way in certain areas. I believe that lots of us started already prepared in this competition, in this race, but this might not always go this way. Everyone is aware of this in the ecosystem, both traditional banks and fintech companies. So this is not really supposed to be considered as competition, but as a question of how do we collaborate. So in our most recent mobile app, we have several examples of which how we innovatively collaborated with fintech companies. So I believe that this is going to carry on like this. Why? Might not be very wise as a question. It doesn't really make sense, because we're a part of a whole. We cannot really separately consider fintech companies and banks. So we can co-create and be more inventive together. Banks are doing very nice things. So they have activities, and they involve fintech companies a lot in their businesses. So it's going really well on that side. But there is one thing maybe to mention. So part of the ecosystem is the regulatory authorities. Especially since early 2020, I have observed a lot of support and a shift in mentality. They have really supported the transformative period. Digital onboarding is an example of that. So here is what we went through. At the ideation stage, all players in the ecosystem are onboarded, and people start working on an idea from the get-go, and it had lots of wonderful iterations, but where we are, I guess it's almost an example to set worldwide. And from there on, I'll hand it over to Tolga. Define, meaning treasure trove, or define X. I'm interested in the treasure trove side of it. We know each other from Accenture. It's been a long time. And following your trips, I guess, you must have a lot of crypto. In the early stages, we were really playing with crypto. We played with it because we were wondering what it was, and obviously, it looked like a solution made by engineers for engineers. I'm an engineer myself, so it's about nerds, right? When you work with nerds, you need to be careful because you might see unexpected reactions from them. Like, for example, strip bonds were introduced in Turkey. Many banks I know, because I have friends from those banks, they called me and said, well, how do we even measure this? How do we calculate that for net cash value? Because when you have engineering involved, then you need to really be careful investing anywhere. From this perspective, how do we see the development? So, in terms of banking and innovation, well, first of all, we have this first principles thinking, so we need to just look back on them. What are the main competences of banks? Good management of risk. So what you do is actually you borrow someone's money and then you loan it to elsewhere. And actually, you might see a situation in which that money might be taken from you, and you're very strictly regulated. So first rule of this is to manage the risk properly, and the rest of everything that you do is just serving the first rule, making sure it's easier to manage risk. Actually, you can't just go out and say, I'm going to lead the way in this business, because that's not how it works. We have a huge pressure on costs today. Both users and consumers want more affordable services and more efficiency at the same time. So there's money to be made, small commissions through payments. But actually, when we look at the balance sheet of our banks, those commission fees are very, very small amounts. So other services make money. So basically, service quality of banks has increased a lot. But at the same time, they found themselves obliged to make sure that those services were provided in an affordable way. And doing things cheaper was possible through technology. But then there was a risk. Let's think of like a neobank game, a digital banking game. Came with the following question: is it sustainable? How do you differentiate yourself? How do you make sure that your service quality is distinct? What kind of brand value are you going to transfer? In a fully innovative and digitalized game, those concerns might not be relevant. So you might want to say, oh, I want to make a difference with my services, but that is not possible only and solely through technological innovation. So there was an obligation to make sure that you provide quality services in an affordable way, and that's where Turkish banks really differentiate. Turkish banks really do it well in terms of under so much pressure, they provide quality services. That's not true in the US, for example. So they're not leading innovation, the banks. They just make use of innovation to reduce cost, and secondly, to optimize service quality. When we think of innovation in fintech companies, we're not just technological innovation. The innovation in fintech is focusing on a specific area. I'm speaking of most fintech companies, and innovate service models there. Fintechs are a leading element of banks in some ways, but when fintech companies grow bigger, when their books become larger, it automatically turns into a risk management business. I guess you've really pointed out something very good. Real industry, real sector affecting banking industry. Banking considers risk in every transaction, so that's something to take care of. One thing that I learned that in banking was that if it's not the right time to do the solution, then how do you make sure that you get to the right time? And then you should not be an outlier. You need to know what you're doing. In terms of international competition, I guess Turkey's positioning quite well. We have experiences in crises, but with technology centers and other activities, banking is doing well. But where is Turkish banking going in international competition, do you think? Let me put it this way. Sinan and Tolga really emphasized very valid points. First, we're talking about risk management and balance volume. And on the reverse side, how welcoming are you to risk? So startups, fintech companies are more innovative than big corporations, people say. But actually, it can be explained by what we've just said. So we're talking about a very complicated ecosystem that's very interrelated. So we have banks and fintech companies all across. I don't think that one of them in that ecosystem is more innovative than the other. In 2015 and 16, I guess it was 2016 if I'm not mistaken, we didn't have a regulation on digital onboarding, so we could not acquire new customers online without a digital signature. And then we talked with a brand and we wanted to partner with them, and here's what we thought. You confirm communication in 10 minutes. On the mobile side, we'll acquire the customer. Within 10 minutes, you go and deliver, and let's do this instantly. Because otherwise, if you have a delivery company taking care of it, then it would take days. And then we said, okay, maybe we can have an ATM machine around your distribution points. Maybe we can enable customers to withdraw money even on their way. But we could not launch this project. You know why? That company had lots of agencies. We found out that most of the staffers of that company were not even licensed to do their own job. So because we're coming from a very regulated industry, so we could not onboard them. Just like Tolga said, very rightly, we could not move forward because of that experience. Obviously, digital onboarding came later, and now loan granting has become easier, so everything is digitized. But that experience I've just mentioned to you is quite striking, really. But here is where I'm leading to. That risk appetite, I think it's one point to make. But secondly, unfortunately, fintech investments, and that's true for the rest of the world partially, lack one point to emphasize. So for 38% of 700 monitored fintech companies are payment companies, and then 1% are money transfer companies. There is one thing that we overlook. Everyone wants to get to the destination instantly, to turn into a digital bank immediately. They have this appetite. Oh, we already have a certain customer traffic. Why don't we go digital, and why don't we turn into a bank? But actually, in a country like Turkey, trust needs to be fixed first, and you also need to fix your balance sheet and also your funding problems. It's impossible for a small startup to have a comparable funding capacity to a big corporation. People hit this wall when they start with big appetite, and I think they're going to carry on. For the ecosystem, we need crowdfunding, and that also needs to come with literacy for users. Banks could also join the funding. Embedded finance or open finance should also be integrated into the system. Otherwise, it's not possible. It's not easy to be a comprehensive banking service provider. And globally, this comes with a challenge as well. Crowdfunding, B2B lending have been tried for decades, but unicorns could not come out of those processes. Both on global levels and locally speaking, what matters is to make sure we have the right formulation. Let's remember, Turkey still could not kill the gray economy or plastic cash. That's why we have roadblocks in digitization. We have cash society, we have a cash society nature, we have gray economy that's very, very widespread. And that comes with a trust issue. All that deposit collection and problems, especially with investments, it all becomes very complicated. So crowdfunding and risk management, balance sheet management should be provided. Unless we have these elements, then they cannot become financial service provider. If we surpass this challenge, then Turkey will lead the way, continue to lead the way in payment systems.
Devlet
High interests, the period of high interests is not really ending, and the government is basically holding everything back. And we look at all the values that drop, and we see that high numbers must drop a lot. And we have seen many examples of IPOs as well. We have many companies in different sizes, like in crowdfunding. The company and they have a funding need, and IPO is probably the costliest means, but interests are so high that they can't really access funding, and with IPO they basically conduct mass or crowdfunding, but the cost is basically covered by the public. But even there we have been quite agile, we have demonstrated. Well, that's why I'm always asking you for tips for certain cryptos to invest in. This is how we're sticking to it, how we are fixated on it. So I have been hearing this from those who have a good command of the state, the U.S. economy. Biden is focusing on the U.S. economy as well. It's not really strong at the moment, and after a while, this growth will prove itself to be not quite strong, and interest rate reductions and discounts will have to be introduced, because in some retail banks, for instance, may turn out to be quite problematic. So it doesn't matter where you are in the world, but before you talk about Turkey's economy, you need to make a direct link with the U.S. economy as well. And if you are comparing this with Turkey, what would you say about the developments in the States as well? I think it goes a little bit more differently than how it is for Turkey. At a global level, the customer expectations are best addressed by big companies like Amazon, Google, and these kinds of big players address customer expectations, and that's why the expectations are set at a very high level, and traditional banks are not really fast to raise their bars to that. First, they allocate a lot of budget, and despite that, they fail to act in a prompt manner. And chess, I guess, 1.5 billion USD was the budget that they allocated, and fintech investments were made, but that leap that we expect does not take place. And customer expectations are definitely at a different level than ours. And that interim period, we have made the best use of it. I believe that the game itself, as Tolga said, will turn to budget management. How we have how we have arrived here. Well, branches, we cannot really serve customers at the branches. It doesn't. It is not because we have lower number of branches. The service model has changed, and I don't want to go to branches either. And another thing must be coming in to replace that. It's not only digitization. At least the cost of digitization should be diminished, should be resolved, and I think we're getting there slowly. And as Jahid said, this can only be done with the ecosystem if we act together with the ecosystem, because these giant operations will have to be handled and tackled in a different manner by banks. As for your question, the dynamics in the States are a bit different when we compare it with Turkey. It's definitely different, but where we are headed is probably the same. We will be using different pathways, but in terms of digital technologies, we will be standing in the same spot after we go through that. Well, there is a constraint there, well, because sooner or later you have to go towards that. But this issue of optimization should also be addressed, because in competition we will be going there. I don't know the pace. The pace will be the defining factor. The global competition, how fast we're going to be when it comes to us catching up with the rhythm of it. In the financial sector, international competition, is there really a spotless competition? Or is there a market for great competition? No, not really, because you're operating subject to different regulations, and synergies may also create certain advantages for competition, while regional groups or regional banks could be an advantage for you, but they don't really deal with all the problems promptly either. Banks operating in multiple countries have been crushed under quite technical burdens. The infrastructure in country A differs significantly from the infrastructure in company B, and digital transformation required for these kinds of operations, and unceasing periods of transformation, and the efforts that are undertaken here. So they basically carry all this burden, and alternatives are also popping up. For example, it may seem to be outside of the limits of banking, but the world that is brought forward by blockchain is worth considering as well, because different cost mechanisms are working in different universes, and neo-banking, the costs and fees and commissions, well, Turkey does not really generate any revenues from it, but we have quite a high number of neobanks, and I don't really know how they're going to be profitable. When you have a bank, when you have customers, when you have less than 1.5 million customers, I don't really know how you're going to be profitable. Everybody would like to focus on neobanking right now, but how are you going to differentiate yourself in a market based on trust? And the priority issue for customers is trust as well, and we're talking about cost of funding as well. And how are you really going to address that? Who will be really providing you with funds, and how are you going to collect it? This is quite a complicated calculation, and digitization or innovation, well, before the core dynamics and mechanics change in the banking world, will not really change the rules of the game. And I see the solution lying in the following: this kind of a banking perspective merged with the human factor. This is where the solution lies, because in certain spots of banking, human factor plays a key role. Yes, nobody wants to go to the branch anymore, because physically having to go from somewhere to another place is difficult. It doesn't mean that they don't want to speak with the bank representative. Why do they have to take a bus, and why do they have to cover all the way? Because it's a time problem as well. What's going to happen with branches? Well, branches are basically buildings, and buildings and offices are considered as a huge burden for people. They're quite cumbersome, and bankers are quite useful, and branches are quite useful, but the building of it and the office of it. Go to a branch, for example, talk with a customer relations officer, and you will see like thousands of customer communications there. And those who ask for codes, who receive codes, all those negotiations and proposals, you'd see them. Digital banking we're talking about, though. So we do not really provide the environment that will enable the customer to speak with customer's relations officer. And Jahid talked about that genuinity, that sincerity needed. Without that genuinity and sincerity, we have higher costs of funding. And I have 2 minutes left here. And is there anything that you wish we talked? I'm asking this to the audience. Or do you really think that we have covered it all and we've been quite perfect? And if that is the case, you can give us a round of applause. Well, this is how I push them to applaud us. No, joking aside, do we have anything that we have missed? And I just wanted to go through the notes provided to me, and I wanted to have my personal contributions as well. For example, I'm always curious to talk about digital currencies because this is something that I'm quite afraid of. This is a virtual thing and it's going to admit its own essence. Well, cash was something, the money was something that we invented. It was virtual, then it turned into cash and it's going back to its original essence. Because we are looking at the record-keeping side of it, we are interested in that velocity of money that we call. And many times we've had discussions, a new project, a new idea, and this being done with the infrastructure of blockchain. Only for the sake of being proud that we did it on blockchain, you are pushing yourself so hard. Well, having that tag and carrying that tag is quite pushed, it's quite forced, and it doesn't really change much. And decentralized, well, I mean, by that I mean a single institution, a single regulator, a single stakeholder governing it. I want it to be democratized, and unless we say that this is what we want to attain, for example, decentralized media, can we have it? Well, partially it exists. I think we don't have it in Turkey. It's debatable. Shall we discuss that? No, I think it's quite like forced, and yes, we will have digital currencies, but we won't really see dramatic changes because I think it's a bit arbitrary. Well, now that we talk about cryptocurrency, maybe we should stay away from subcoins. No, just joking. Well, as you have seen, bankers have been quite sensitive, and we have a black cat, and before she walks in front of us, we're concluding this session.